All right, guys, this is Simone. I am recording this video to explain how I trade the MW patterns. And this particular structure is what I want us to focus on. The M's look like this, typically. Um, the, and the W's look like this. And when you trade this particular MW structure, you get great results. And, the risk is very low. So the reason these are so powerful, these particular MW structures, is because I like, for instance, the M, it goes up, creates a high, pulls away from the high, creates a low, creates a higher high than the first high right there. And what this is why it's important, because what big money, which is the market, what the market makers do is that they break the high, giving breakout traders the impression that they'll be going higher, and then those people begin to buy. And then also people who started selling here, it stops them out because they say, hey, it's gonna buy, you know, or they start closing out their trades with loss. So this is a stop hunt phase. This entire phase here where the market goes up, get people to buy when really and truly what they're planning to do is sell. All that is a stop hunt, and it turns around and tanks, right? And the M gives you a sell, right? Similarly with the W, here we have price going down, creating a low, pulling away from that low, then creating a lower low, right? Than the first, right? So now what's happening, is an induction phase where the market maker gives the impression that by breaking this low, we're going lower, and get people to begin selling. But really and truly, what they want to do is buy. So people begin to sell, and then the market reverses, and we get a big move, right? So now this phase right here is our stop hunt. I want you to pay attention to that. That's a stop hunt. Stop hunting, right? That's a critical part of the MW structure that we're trading, okay? All right. Then the M, the W, sorry, gives a buy setup. So the M setup gives you a sell, and the W gives you a buy, right? You look at these patterns and keep them etched in your brain. M with the stop hunt, the W with the stop hunt, okay? All right, let's see if we can pick up a couple of them and just go along the line. All right, so right here, I'm just gonna pick, those that I can clearly see. So we can clearly see here the market went up. Sorry, right here, the market went up. Let me zoom a little bit so you can see better. And I'm trying to keep that down there so you can compare with what we're doing. Okay, market went up and created a high. Price pulled away from that high. All right, but then the market pushes up and creates a higher high. And one of the things that's important to note, very, very important to note, if I had another tool, I would not use lines to draw the MMW. I would draw a curve structure like this, waves. Because what you'll find is when it's going higher, you will get a U-shaped curvature. You see it? The arch. Arch is up. Candles arch. This space between the candles arch up. See that space? See there? That U there? That U formation is very important. So it arches up and creates a higher high, higher than that of the first, right here. Now, what do we do? What I do is that I look at the bearish candlestick pattern at the first high, the highest bearish the candlestick pattern. So notice, no, for me, I use two candlesticks to determine a bearish or bullish. So I combine a bullish with a bearish to form a bearish. So blue followed by red is a bearish pattern, which is what we have right here. So let me do. Okay, so we have a bearish pattern here. We see the bearish pattern here at the swing high. So what I want to do is to find the price that the sellers really want to sell at, which is going to be the high of the bearish bar in the bearish candlestick pattern, which is right there. Can you see it? So I just put a line right there. Okay, so now that we have our higher wave, what we're waiting to see is a bearish candlestick pattern followed by a close below our, I'm going to call this our trigger price. Okay, this line here. So once price closes below here, I know that we're looking to go down. All right. So this is our Q. This is our Q. This bar closed below that trigger line. So now I know, yes, we're going down, so I can start selling on this bar. All right. And the markets respected the price. Look at that. Respected, respect. And it's sold. Let me just try to zoom a little bit so we can see how far it went. I mean, it sold first for 12 pips, you know, came back up, sold again, 14 pips, came back up again, and this was the true sell. All right, that was actually went 38 pips down, giving us a beautiful M. See that? I hope you see it. I hope you can see it. Very powerful. Right? Move along. Move along. And let's look at this. Let's look at this one. This one. I'm just gonna move this line. Helping you to see it. So now we see the market falling here, creating a low. That's our first hint to start planning. Then price pulls away from the low and goes up. Okay, there we have our first leg of the W. Then now we have this curve. So this arm, this arch. Every time it's creating that, doing that stop hunt, you get this arch. Right? That's very, very important. That little U-shaped arch. This is an upside down U. And the market pulls lower, creating a lower low than the first. So now I need to find my trigger price. So let's look. We need to look for a bullish candlestick pattern, red followed by blue. Then we're going to draw a horizontal line at the low of the blue bar. See that? This represents what now? Our trigger price. What's the trigger price? That's the price they really want to buy at. Okay? So what I do now, I wait for the price to close above it and give me a bullish candlestick pattern, or vice versa. So now we have a close above, then we have a bullish candlestick pattern right there, red and blue. So this is my cue right here that we're going higher. So what I do, I wait for price to come back to the trigger, right? Candles push back to the trigger price, giving a nice buy for 22 pips. I hope that, oh, wrong line. Hope that you can see that. Bam. 22 pips. Easy cheesy. What are we trading? That was a W buy. All right. Let's move it along. That's one trade. That's two trades now. You know, we just trading it and as they set up. Okay. Now we've got a push up. I'm sure that you probably see that push. All right. And then we got this pullback. And what's critical, you know, I know you're looking at something and saying, is this an M, is this a W? What's critical is the arch. When it goes and creates that higher high or that lower low, look for that U-shaped arch up, arch down. Here you can see clearly, arch, clear arch. Let me just zoom a little bit. Here it is, that space between the candles, arching up. Beautiful. So you don't have to wonder, you know, whether that's forming the second leg. So the first leg is the first half of the M. The second leg is the first push up, okay? So now what we need to find is our trigger price. So we go to the first high and put a line at the high of the bearish bar in the candlestick pattern. This bar right here. See that? Good. Now, what we're waiting for now is a candlestick pattern, a bearish candlestick pattern, which we have right here. See, blue bar followed by the red bar. Then we need to see price closing back below our trigger price. There we've got it. This is our cue. Now, after that bar closes, we know we can start selling. Now look at this, guys. Look at this, look at this. Sell there. Sell again. Opportunities, opportunities, opportunities to do what? Sell. What the market doing now? We're going down. Look at this. We could have sold 1, 2, 3, 4 times on that trigger price. One price. Look at that. Beautiful 74 pip trade. Beautiful trade, isn't it? Very easy. And you can see the clear wrong line. You can see the clear M. Look at that. The very clear pattern. Very clear. Clear as day. Right? So now, let's look some more. There's so many. This happens every day. And this is a 15-minute chart. I love to trade it on the 15-minute, you know, because the risk is so low, you know. All right, and you still get the reward. So look at this now. Now we've got this drop, right? Bam, possible W, low, price pushes up. Then we've got a lower low, bam, right? Breaking below that low. So what we need to find, our trigger price. Bam, what was the trigger price? Uh-oh, wrong line. Trigger price, the low of the bullish bar in the candlestick pattern at the first low, right there. Bam. So we know that's where they really want to buy, right? So what I'm waiting for now is a bullish candlestick pattern to follow. Bam, there we got it. And sometimes price doesn't come exactly back to the trigger price, but I wait for some kind of pullback close to it. Then we could have bought right here. Look at this. 27 pips. It came back again. And the trade did a nice 43 pips. Beautiful W buy. A beautiful W buy. Can you see that, people? Beautiful trade. Beautiful, beautiful pattern to trade. And this pattern is best traded in the London and New York session. Asia is not the best time. You know, during the Tokyo session, I do not recommend trading this, and it's not recommended that you trade it. From where I learned, not recommended that you trade it there during that time. Okay. All right. And there we've got it. I'm just gonna run over to today, and this is the gold. These are my pairs: pound, dollar, euro, dollar, gold, US yen. I may fool around some other pairs, but these are the pairs. You know, I actually said I'd start focusing on these. You know, it's easy because the gold trades with the euro dollar, and the US yen trades opposite to the gold. So when the gold is buying, the US yen is selling, right? And when the gold is buying, these two will go with it. So it's kind of an easy correlation, okay? Right. So let's look at gold today. I think that's about. And I'm going to show you two trades that I took on the gold, and you can relate to them. You can relate to the trades where you had this drop down here, price push up right there, price break low right here, closing lower than the previous. So I find trigger price, which is the low of the bullish bar mechanics pattern right there. So I know that's where they really want to buy. Price closed back above with a bullish pattern. So right there I have my trigger bar. This bar tells me, yeah, we're going up. You know, you can see that. And then the price comes back close to the trigger price and gave a buy right here from here. Good 44 pip trade. 44 pips trading the letter W, man. Easy trade. See that? 44 pips. I mean, some people draw these a little bit differently, but I find it easier when I take it this way. You know, some people don't bother to draw the first leg, you know, but it's confusing when you don't do it. So I like to do it this way, and I think it's clearer for you when I do it that way. All right. So that was 44 pips on that trade. And then guess what now? Market went up and created this. Let me do this. I want you to see this right here. It pushed up to here, pull back, created that high, pull back, and I know you can see that curve, this arch, man. This is the most important thing on the second leg. You need to see this arch. Look at that U-shaped curvature, just like here. When it came down, it created that the upside down U arching away. You know, so this one arched up, this one arched down. You see that? So the arch up, creating a higher high. And what we were looking for was the price to close back below the high of the bearish candlestick pattern, the bearish bar and the bearish candlestick pattern, which was right here. So that helped us to find that's the trigger price right there. That means that is where the strongest selling is going to take place. We're not too concerned about anything else, right? So we had a close back below here with a bearish candlestick pattern. And to be honest, this was our trigger bar right here. We expected price to start selling there. So we could have started selling here. It went a little bit higher, but not too high. You know, went 15 pips out, but you would still be in the trade. You know, I keep my stops like at 20 pips or so with this pattern, 25 pips. Good stop. All right. So it came back again. In fact, it created a small M. You probably see it right here, up, arch away, and then there you had a second and a small trigger price right here, and gave that. But we're looking at this one, okay? And came and closed back below here again, giving another trade, right? And then the price fell for a decent 52 pips. Look at that. Look at that, man. Look at that. 52 pips, trading the letter M. Trading the letter M. Simple system, simple system. Nothing more complicated, nothing more complication. Keeping it simple. Look at this. Look at this one here. I want to show you this setup right here, right? This setup right here. Look at it, right? Very subtle but very powerful setup. Market pull down, created that low, and then it pulled away from the low like that. Small pull up. But you can see that distinct curve, that arch, that U shape. See that arch? Yes. And it went down and created a lower low. So what we do, we find our trigger price at the low of the bullish bar in the candlestick pattern right there. So we know that's where they really want to buy. We wait for a bullish candlestick pattern and a close back above the trigger. We got that. So this is our bar that is going to tell us, yeah, we're going to be buying. Price pull back to the trigger right here. Can you see it? That's a nice pullback right there. And then guess what now? The market started to buy. Beautiful trade. Beautiful trade. If you came out here, you made 33 pips. If you came out here, you made 49. If you came out here, you made 86. If you came out here, you made 95. Pips, pips, pips. Trading the letter W. And I think that with that, you should get a good understanding of how the MW strategy works. This is how I trade it, and this is how I draw it. And I think when I do it this way, it's much clearer for you to understand. It's easier for you to understand. It's easier for you to trade it. You know, just train your eyes to get the pattern. Remember, you have a pull down, an arch away, and an arch down between the candles. Close back above the trigger price, which is the bullish candlestick pattern low. Price goes up. And then with the reverse for the W, remember to look for that arch. Remember to draw your lines, your W as it forms out. Remember to put the line on the trigger price. Very important. That trigger price helps you, man. You have an idea. You know, even if it's not exactly there, you have an idea where you're gonna, you know, be entering the trade. So you know how far out you are. You know, and these happen all over. I mean, I'm talking to you now and I'm just seeing them. You know, here's another beautiful one. You know, price went up, came back down, and pushed higher, And you can see that arch. See, it always gives you this curvature, man. You see that? And then we had our trigger price right at the high of the bearish candlestick in the candlestick pattern. Look at it. Look at how exact it came and just closed below it. And look at that. Just took that trade, man. Look at that. That was a beautiful 37 pip trade. Look at that. Easy cheesy lemon squeezy. It was easy, man. And then, I mean, if you there's so much. I'm sure you guys you must be able to get it now. That's the MW pattern. You don't have to. It's so easy, man. Easy. You know, I wouldn't tell you guys to trade anything else. This is, I think, the most powerful market structure pattern that you can trade and the most profitable, low risk. And I'm talking to you and I'm closing the video and I just decide, hey, I'm just gonna draw the next one that I see so you guys can see it, man. So you can see it. Okay, so there you have it. There you have it. Market pushed up, pull away, and see that U shape, that space between the candles giving you that U, that arch up, man. And then we'll mark our trigger price, which is the high of the bearish bar. This one in the bearish candlestick pattern. Two bars make the pattern, blue and red, bearish. And then wait for price to give us a bearish candlestick pattern on the second leg, which is the higher high. And one price to close below. Look at that. Close below. And look at this. Look at this man. Look at this close below and tell me, tell me. Look at that, right? And then the market just dropped for 117 pips. What more do you want? Trading the letter what? Letter M. All right, so that's the lesson. Hope you enjoyed it. If you have any questions, give me a shout out, Simone. You know, anybody who has this must be my friend. So this is my personal, you know, take on the MW pattern. Hope you enjoyed it. Trade well with it and make some money.